Hey Mike, what are you working on?
How to trade the Lyft IPO. One of our developing traders put together a PowerPoint on how to trade this opportunity, and I've given some feedback on some additions. So we've been going back and forth a few times to get the presentation right, and now I'm just making some of these final edits. Then we're going to go to our training room and teach the concepts behind how to trade an IPO using Lyft as an example.
So why is this an important lesson for the trading community?
Yeah, there's a ton of IPOs that are going to hit the market this year. This is a strategy that has edge. It can bring significant and consistent profits, and all the top traders at our firm are trading IPOs, and we want to share this with the trading community. If you want to learn 3 real-world setups that our traders use, including the simple strategy that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education. Okay, how to trade the Lyft IPO. So Lyft is a transportation network company. It's based in San Francisco, California, and it's operating in the United States and Canada. It develops, markets, and operates the Lyft mobile app. It launched in 2012. Lyft operates in approximately 300 US cities and provides over 1 million rides a day. Same space as Uber, which is due to IPO this year. Going first to IPO in the Uber ride-hailing space. So there was a lot of interest in this IPO. The thought was, if Lyft did really well, then Uber might do really well. The thought was, if Lyft did very poorly, maybe this would send a signal for how Uber would do really well. Lyft is certainly the lesser known in the ride-hailing space, but it does 30% of the market share in the US. It's the second largest ride-hailing company in the US, a significant company. And this is, it's important to put this in the context of what we're expecting in 2019. You can't just trade Lyft in a vacuum. As we mentioned, it also may give us a heads up on how Uber might do, but it also might give us a heads up on how this hot IPO market, the anticipation for this hot IPO market in 2019 is going to do. This is one of the first in this bucket of hot anticipated IPOs in 2019. Okay, so you gotta see this trading opportunity in that context as well. And so Uber is gonna be coming a little bit later this year, the world's preeminent ride-hailing company, potential IPO valuation of 120 billion to date. Airbnb is gonna come to market. It's that nimble, profitable room listing platform with very little overhead. Potential IPO valuation of 31 billion as we speak. Slack, which we use every day here, and I'm sure lots of you use as well. The workplace messaging app for all the small businesses that need to communicate better with their employees and partners. This is the platform people are using. Potential IPO valuation 10 billion. Robinhood, the no-fee trading platform, which has surpassed E-Trade and user count in 2018, potential IPO valuation 5.6 billion. I haven't done an interview with a college student in the past 6 months where that student didn't have a Robinhood account or didn't say they had a Robinhood account. Pinterest coming next week. Image search and sharing app, potential IPO valuation 12.3 billion. Postmates, my wife uses this every day. Delivery of goods and food locally. She's trying to get me into it, I haven't used it yet. Potential IPO valuation of $1.2 billion. The Lyft valuation. A ride-sharing company recently filed with the SEC a few months back. The company reportedly aimed for a valuation of 20 to 25 billion. Lyft was valued at 15.1 billion at its most recent funding round. Lyft is growing revenues at an extremely rapid pace, but it's still losing a significant amount of money, both on net income and cash flow basis, and remains EBITDA negative. Even so, the street expects significant inventory demand, which should push the valuation to a higher end of the targeted range before taking into account potential post-IPO pop. Big picture and fundamentals. They raised the IPO price range to $70 to $72 a share, up from the initial pricing of 62 to 68. Gonna offer 30.8 million shares in its IPO. Top underwriters doing this deal. Top underwriters doing this deal. Tier 1 underwriters doing this deal. JP Morgan, Credit Suisse, Jefferies, UBS. 10 times oversubscribed in a hot developing sector. So we've got really good underwriters. We've got pricing that is going up and up and up and up. Hot sector, oversubscribed. Those are things that we want to be thinking about to help us determine how well this can do day 1, day 2, day 3 when we're trading these IPOs. All right, lots of guys, we're really interested in trading this on our desk and certainly in the trading community. So, Lyft opens and forms a range between 87.20 and 85.50. We noticed the tape was heavy at 87.20. Note when something is going to get pushed higher, meaning when it's going to trade above 87.20, we'll see it skipping prices. We won't see that heaviness. We won't see that stubbornness in its ability to get above 87.20. It'll get above there easily. We're not seeing that. And we're not seeing it get above that 87.20 and then push away from that price. This is not that price action that we look for when a stock is going to run and trade towards the highs. We didn't see that. And so, right now what we do is we have an opening range. So a lot of people, before the IPO hits the market, they're thinking about, hey, I've got to know that this is going to go higher or lower from the open, from the opening print, from the opening range. And as you can see, you didn't actually really need to know that. You can see the heaviness on the tape at 87.20. You can see where it can't trade below at 85.50-ish. All right, you can see that. All right, 87.20 to 85.50. You can see that opening range develop. And now, because you have that heaviness on the offer and on the tape, you can start to make really good quality trade decisions. And so the first thing that you can do is tier 1 at 87.20, short, give it to above 87.50, give it a real stop so you don't get wicked out, put on a little bit of risk there, and as you can see, the stock tries to get above there. If we look at point number 2, you see this, the candle tries to get above there, above that 87.20. It wicks above there, but it can't really hold above that 87.20 area. We highlight that with our yellow and our arrow for point number 2. That's a weak sign for the stock. Whenever you have a resistance level, a little bit of a push above that resistance area, and we can't close above that area, right? The candle doesn't close above there. Buyers can't step up above that resistance area. That's a sign of weakness. That's a sign of weakness on the tape. We can use the top of that wick as a pretty pronounced level to trade against. And so we're getting that resistance there at 87.20. We can short against there. All right, point number 3 right here, you can see the arrow. We can get to tier 2 when we get below the bottom of the range. And what I mean by range is, since it has opened trading, It has not been able to trade below 85.50. It has not really been able to hold above 87.20. That's the range. And so now it's getting below this young range in its trading career. So when we get below the bottom of that range, the next price we think about is what? We think about the IPO range. We think about the IPO price. And that's a long way from here. We think about the IPO price. That's the next thought in my head. When it gets below that range, we're thinking about the IPO price. That's a long way to 72, but that is, in terms of technicals, that is our next level for now, okay? And so, as you can see, point 3, we're going to go tier 2 short because we got below the bottom of the range. That's a new reason to get short. So we're putting on an extra tier. And the next price we think of is the IPO price, or we look for value buying. IPO stocks trade very much based on technicals because they're so young. Technicals work way better in IPOs than other technical levels that you look at because there isn't much to disagree about. Below 85.50, the next technical level is the IPO price, as opposed to others when you're looking at stocks where you can come up with lots of different technical support levels. This is not the case with an IPO. All right, let's go to point 4. We're going to go tier 3 when it breaks the 85 support area. So finds a little bit of support at 85, a little bit of value, not much. When it gets below there, we're going to put on some more risk again. So we're up to tier 3. 84 begins to hold. There's a large buyer there. So we said value buying can be a reason to make a trade decision. And so we're seeing some value buying at 84. We want to take off some risk. We want to take off some risk at 84 in case this is the bottom. There's a little bit of buying at 85. There's a little bit of buying at 84. Let's take off some risk, make a trade decision, take some profits, and go from there. All right, so just repeating point 5, 84 begins to hold. There's a large buyer there. We're covering. And our idea is to add a tier back when 84 breaks on volume. And we got that. Okay, so we're going to take a little bit off, make a trade decision because there's buying at 84, gets below 84, good volume, we're going to put some risk back on. We're using the technical levels from the start of trading. All right, let's go to point number 6. Lyft pulls into 83. We want to cover some of the position and watch how much volume is done at 83. The more volume that's done, the more likely it is to hold. You want to compare this to the level at 84. Is there more volume being done at 83 than there was at 84? We want to look at the up moves that are happening at 83. The more shallow the up moves, the more likely we are to see continued weakness. Notice 83 is not holding and Lyft is making lower highs. Okay, so we're looking at those up moves from 83. The shallower the up moves, the more likely it is to get below that 83 level. The more it moves up, the less likely. Okay, but that's, we're observing. Remember, this stock needs value buying for it to go back up. And so we're being open-minded. We're not just sitting there saying, it's below the opening range. Therefore, the only thing that can happen is for the stock to go to 72. That is likely. That is the most likely thing right now in the stock. But another potential reason, another potential pattern that this can trade higher, this can stop going down and trade higher is what? It's if you see value buying. So while I'm trading this and while I'm winning and while I'm on the right side of this position and while it's working for me, I'm not just sitting there like an arrogant you-know-what saying and high-fiving myself and all my buddies who have the same position as me and seeking out everyone who has the same opinion about me about Lyft. I am being open-minded. I'm searching for reasons why I might be wrong. I'm searching for reasons why this trade might be different. And the thing that could be different is the value buying. If there's too much buying at a particular level, that could be the key. That could be the catalyst that turns this stock around. So I'm searching for that. All right, let's move on to our next point. We get below that 83. And so you can put on a little bit more risk right there again as it finally gets below there. We pull into 80, gets below 83, has a nice down move, and that's what we want to see. Trade's really working nicely. We pull into 80 and can't quite test it. 80 could be a psychological level, and there's a trade decision to make there shortly after 80 holds. It's best to cover the short and reevaluate. So like we did at 84, like we could have done at 85, like we did at 83, we have a trade decision to take off some risk. In this case, a good idea to lock in some profits, take off some risk, and again, be open-minded. How much does it go up from 80? Does it have a shallow up move? Right? How much buying is there doing at 80 relative to 83 and 84? How quickly did it move down to 80? And let's reevaluate and be open-minded. Let's not be arrogant about it. Let's trade. All right, next slide. And so time passes. We're not getting below 80. We're not getting below 80. We're not getting below 80. We're getting below 80. All right, we see the bids decrement and we hit in short as soon as 80 drops. This is a high probability momentum trade, particularly into the close. Go ahead and look at the really good IPOs that you've seen of late. Notice how they react in the last 30 minutes of the trading session. They have really good moves, particularly in the direction of how they have moved. Strong stocks can have an even stronger move in the last hour and 30 minutes of a trading session, even 15 minutes. Weak stocks can go down even more. It's more directional. Remember, it's young. It's a young stock. Its technicals are more important. And so we get below 80, cover a piece when we fail to hold under 79.50, cover some when we break and then we move into 79. And then to me, the last 10 minutes, 5 minutes of the day is always a little bit of a crapshoot. You don't know what's going to happen. There's some volume that comes into marketplace. There's some order flow that comes into marketplace that can be a little bit sporadic. In this case, when something has made a pretty good move, you're going to have a trade decision at 350 and 355, and you're really going to have to work on that for your reasons to exit. Time, closeness to close, for those of you who want to concentrate on being an intraday trader, is a trade decision. All right, we go into the close, and we can see that 80 level is important by seeing the massive volume buying done there. All right, I don't want to leave day one ever. I don't want to leave day one ever without understanding the important levels that we learned from day one. And we want to use them on day two. This can be just as good, just as juicy, perhaps even better, perhaps even easier, perhaps even cleaner. Day two, by using really good days we learned from day one, we're sitting there watching our screens, gathering information. The stock can pop up to those levels that have failed from day one and give us really easy shorts. And so I want to make note of the really good support and resistance areas from day one. I want to use them on day two. Never leave day one trading anything, particularly IPOs, without understanding the levels that we can trade day two. Great to put into a trading system, day two trades. And so opening print 87.24 is a level. High day 88.60 is a level. Volume breakdown, started the downtrend 85 is a level. A lot of volume done with multiple tests, 80 is a level. IPO price 72 is the level. I'm taking that into day two. And you can make some day two trades. Don't want to focus on that today. I do want to make one important lasting point. Huge point when you trade IPOs. Perhaps even the most important point that we can learn from trading this IPO and IPOs around it. And particularly since we've got all these really good IPOs, all these hot IPOs that people are anticipating. Huge point to take away. While Lyft was a very opportunistic IPO, an even better IPO was a little known Chinese online broker that a lot of people weren't prepared for. It was the easiest IPO to trade. It was the best IPO to trade. It was the most opportunistic IPO to trade. It went from $8 to $16 in a couple of days. It opened up 5 to 7 range, priced at 8, opens right at 8. You can use 8 as your support level. Never got below there. Halt up. Trades up into the last 15 minutes. Spike up. Okay. A couple of days later, new high. Trades up. Very simple, easy trading in this tiger just by being prepared for all of the IPO opportunities. To be prepared for all of them. Not just the ones that everybody's reading about in the news, to be prepared for all of them. This is a system that you are trading. This is an IPO system that you are trading. It is not the system of, I'm only going to trade the ones that are in the news. I'm only going to trade the ones that Kramer's chirping about at home. I'm only going to be the ones that's on the front page of Bloomberg.com. This is a system. Sometimes the ones that people aren't talking about are the best. This is an overall strategy that you can make money in, and the guys on our floor make tons of money in by trading an overall strategy. Okay, so prepare for all of them. Develop a system for all of them. Take advantage of all of them. And then when you do the math on how you're doing for these strategies, include all of them. Don't miss the best ones. Because then your math's going to get screwed up and you're not going to have a clear picture of how you can trade IPO strategies.
So how do you think that went?
I think it's an important strategy. I mean, this is a strategy that a lot of us are going to be using here. One of the things that we try and share with the trading community is, hey, here's the work we're doing. Here are the things that the 7-figure guys who we've trained and worked with and have become great are doing. And we want the trading community to experiment with them. The independent traders, the real retail traders, go ahead and experiment it. If it works for you, terrific. The huge win in this for us and for those who are working on their game at home is get so good, develop a track record so that, and maybe from some of these videos, so that we're going to really want to hire you. That's a huge win for us. It's a huge win for you guys. It's a huge win for the community. And hopefully this is just one piece in a trader's puzzle to becoming as good as they can be. But this is what we're working on. I hope it helps. Hey, so go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.